And there we have it. It's another hike right here in Nigeria, but another 100 basis points from the previous 150 basis point there. We heard the central bank governor there giving the briefing right here in Lagos. Analysts were expecting at least 50 basis points, but we're getting 100 basis points. So some others actually saw this coming at the end of the day because we're seeing, inflation rise even more aggressively at this point, even after the previous hike. Well, joining me now, we have Dr. Muda Yusuf, CEO, CPPE, join us right here in our Lagos studio. And we also have Nnamdi Nwizu, co-managing partner, commercial partners, join us via Zoom today. And we have Chinwe Egwin, Chief Economist, Coronation Merchant Bank, also join us. But I'll start with you, Dr. Muda. So it's another 100 basis points. Are you surprised at this decision?
Well, not too surprised, but I'm concerned about the implication of this. Because when we look at the variables driving inflation in Nigeria, it's possibly not exactly the same with many of these other countries that the CBN, is comparing Nigerian economy with. Of course, the energy situation is a #1 issue. Effect on production, particularly those who rely on diesel for purposes of, generating electricity. Then the impact on transportation, because most of the trucks that move things around in the country, haulage, are powered by diesel. So that's a major factor. The second major factor is the depreciation in the currency, the exchange rate factor. I'm surprised that in the communique, there was no reference to the widening gap between the official rate and the parallel market rate. That's a major issue, which I expect the MPC to also address. But what I heard was, a kind of commendation that things are still stable.
Yeah, with the RC 200.
Yes, it's one of the biggest trouble spots that we have. So I'm not particularly comfortable that that was not addressed. Then, of course, we have the issue of insecurity. That has been with us for some time. And we all know the very serious implication that that is having on food production. Then, of course, there is one factor that the CBN and many government officials are often silent about. Is the degree or the rate at which the CBN is providing overdraft, to the government. We have seen a lot of figures ranging from 15 trillion to almost 19 trillion cumulatively. That, again, is a major issue in inflation. That does not come up, and it rarely comes up in the discussion that we have with government authorities.
Quite interesting.
The only time we have this kind of, the figures come up is when we have budget sessions, like in the last budget presentation analysis that the minister said, over 1 trillion was paid as interest to CBN on ways and means. So where do we stand on all of that? These are the key issues which I think we need to address, because MPR increasing is just going to put additional pressure on manufacturers and investors. Because if you look at domestic credit to private sector as percentage of GDP, it's less than 20% in Nigeria.
And if they do not act, at this point, that's talking about with the interest rate,
yes,
that would also send another signal.
No, this system is not credit driven. It's not credit driven. I'm just giving you a data now. Credit to private sector as percentage of GDP is less than 20%. In South Africa, it's over 100%. In US, that the CBN was, it's over 200%. That shows the significance of private sector credit in the economy and the size of it. So we need to compare like with like.
Quite a lot to unpack there. But let me go to Chinwe Egwin. I don't know if we have Chinwe Egwin right there or via Zoom. Is she there? Hello, Chinwe.
I can hear you.
Yes, Chinwe, I can hear you. Let's have your own perspective on this 100 basis points hike and the impact you think it will have on inflation.
Well, this was somewhat in line with our view. We did expect a rate hike following the uptick that was reported in the inflation figures. I think it's safe to say that there are expectations around GDP coming in at as high as 3% year on year for the Q2 numbers. I think that will be released in August. So this was somewhat in line with our view. We also did consider that there could be a hold stance that is given the committee's popular wait and see approach when they make decisions to appraise the impact of the decision that has been made. But on inflation, the governor did mention that issues surrounding inflation are structural. He did mention that inflation figures are, climbing across different economies, advanced and developing economies. So what is the impact on inflation? Let us see what will happen, because the supply side constraints is really cost push inflation that we're seeing right now. Of course, this monetary policy tool is what central banks use to combat rising inflation. So apart from hiking, there are other elements or other policy actions that are required to help with taming inflation, which are geared towards structural issues, or just closing that infrastructure gap that's super wide in Nigeria.
Right, quite interesting, but hopefully we'll see some kind of reaction, at the next inflation report we get. But let me come to Nnamdi Wizu, also join us via Zoom. Great to have you, Nnamdi. So let me have your reaction, to this hike at this point.
Well, the hike was expected. If you look at what's happening globally, we've seen central banks across the world continue to raise rates. Fed is expected to raise rates by 75 basis points at their own Fed meeting next week. Some are even anticipating that you might have a 100 basis point hike. So if you are to look at inflation and look at where the correlation should be between our own rate hikes versus what the Fed is doing, then you would even see that 100 basis points might not even be enough at this point in time. However, like Chinwe said, beyond just raising rates, there need to be other actions taken by the central bank if they're trying to rein in inflation. If we consider the fact that OMO rates haven't been moved up by the central bank from the last MPR rate hike till now, signals sort of to the market that we're really not ready to push up this rates, because ideally we know right now in the market that OMO is a much more effective tool than just raising the MPR rates. So as long as you have OMO rates remain where they are, and then you have CRL remain where it is, then it's a bit difficult to have a hike in the MPR to be as effective as we expect it to be.
Right, and what do you see, how do you see the equities market actually reacting to this?
Well, rate hike is always negative for the equities market. As long as the central bank starts to tighten, then you're most probably going to see equities market struggle. We've seen the market struggle a bit since the last MPR hike, and having another one definitely means that you're going to see a bit of sell-off in certain names or certain stock. People are going to be looking at options that they have. So if you're looking at when Treasury bill rates were at 1% versus now where the last auction closed at 7%, and the central bank does tighten, raise OMO rates, then you start to see that fixed income and other things become a bit more attractive, and you start to see better alternatives, right? And then also for some of the companies, it also increases their cost of funding. So it definitely would have a negative impact on the equities market, and it's the same thing globally.
Right, and it'd be interesting to see how, the market actually closes. They will be watching out for that. But let me come to Dr. Muda now. So it's another hike now. Let's say the next inflation report comes out and we don't see inflation actually tamed or reacting at all to this. What next?
You see, personally, I'm not optimistic that the MPR will have any significant impact on inflation, given the very nature and structure of our economy, and given the nature of the key drivers of inflation. At the last MPC meeting, we had a 150 basis point increase. Between then and now, what has happened to inflation? Inflation had gone up further.
Or would it be like some kind of lagged effect? Or maybe...
Not necessarily. It's a question of how effective or how potent these monetary tools are in dealing with inflation.
And we saw the same thing in the U.S. too.
The U.S. economy is not the same thing as the Nigerian economy. I mean, look at the kind of forex crisis we are having. Between then and now, look at the situation with the exchange rate. You know, and that is one of the things that bothers me. If the CBN doesn't reckon with the fact that we are having a major crisis with exchange rate, if the CBN doesn't reckon with the fact that the parallel market rate is now over 600, if the CBN doesn't reckon with the fact that the parallel market is now becoming almost a default market for forex, then we have an issue. Because we need to address all of these things together. The bigger issues are supply side issues. Of course, the CBN governor mentioned the need for the fiscal authorities to do a few things, but I expected a lot more emphasis on that. And already, prime lending rates, as a result of the last review in the MPR, prime lending rates had gone up to between 18, 19, almost approaching 20. Now with this review, what you are going to see from the banks to the investors that have already borrowed money from them is a review of rates. So how will these investors deal with all of this? You have a hit that they are taking from the FX angle because there is serious challenge of liquidity in FX. You have the issue of the diesel that they are dealing with. Now, on top of that, we are adding additional pressure on interest rates. That is my concern, because these are the entrepreneurs. We are talking about creating jobs. We are talking about increasing output. To the extent that this will not actually moderate inflation, it can only put additional pressure on those who are in production and those who are investors in the economy, the entrepreneurs. This is my concern. So we need to deal with this issue, and the CBN needs to come to terms with the reality of our FX problem. If you talk to any business person today, two key issues: the energy issue, which is the diesel issue, and the FX issue. We are not getting the kind of emphasis that these issues require from the authorities. And that is not good for our economy.
Yeah, the FX issue is quite a big one. And let me bring this to Chinwe right now. So Chinwe, the FX issue is still, the huge elephant in the room at this point. And, we've seen how the US dollar, has gone on a massive run, when the US Fed started hiking rates. And we're hiking rates here, but still we're not seeing the Naira actually strengthen. What do you think we should be doing now and, other emerging economies to actually strengthen currencies?
Well, I'm going to limit my response to the INE or NAFEX window.
Right.
And of course, there are multiple factors that influence the exchange rate, such as the external reserves level, which is crucial. And we did see a month-on-month uptick with the reserves at, I think, $39.2 billion in June. And of course, as you've said, Naira has depreciated. It depreciated by 1.3% month-on-month on that window to close at 425 Naira per USD at the end of June. What we've also observed is that there have been FX injections from exporters and non-bank corporates increasing, or in June, we saw an increment. I think both of them accounted collectively for about 74% of FX inflow into that window. Now, in a nutshell, or in summary, my response to your question is that FX demand pressure is still outweighing supply, and in coming months, there are expectations that this would persist. We also have to understand that the electioneering period would soon hit its peak, and just based on historical or trend analysis, there's usually increased pressure across windows, including the parallel market, during this period. So small room or expectations of steady depreciation in coming months would not be a far-fetched assumption.
Right, and let me come to Nnamdi now. So what do you think investors, should be doing at this point? Because it looks like the MPC right now is ready to go as aggressive, as possible.
Well, so it depends on what type of investor you are, how savvy you are. If you are a market trader, for instance, you most probably see more people looking to go short on some financial assets. You see people looking to exit their equities. Most people want to wait. Either you're waiting, so you're exiting your position, staying on the sidelines to see how aggressive the central bank will be with tightening, or you decide you want to go short so that by the time asset prices fall, be it equities or bonds, then you can come back in to buy at lower prices. We've also seen quite a bit of interest from a lot of clients who are looking to get USD exposure. So you've seen them, looking at or focusing more on assets like Euro bonds or US equities versus local papers. So I guess that is the trend now that we see, and you might see a bit more of that happening. But a lot of people are worried with the way the FX market is going. So this isn't the best of time for most of them to try to lock in. This is the time to try and either stay neutral or look at going short to take advantage of the expected increase in interest rates based on the central bank policy and the central bank direction at this point in time.
And we've seen the equities market, it is the best performer, for the first half of this year compared to other equities market. Do you think it's downhill from here?
Well, I think we'll see the market struggle. We've already seen what has happened since the last MPR hike. We've seen the market have struggled to continue on its upward trajectory since then. And if the central bank does tighten aggressively beyond just raising the MPR, then we'll most likely start to see the market struggle a bit more and possibly see the index start to come down. That will be my expectation.
Okay, well, we'll keep tracking that market, but let me bring it to you now, Dr. Muda. So, you heard the central bank governor that he talked about, disbursements to support the manufacturing and agri sector. Quite a good amount of disbursement we're seeing. Talking about 744.32 billion naira. That went to, I think, the manufacturing sector. How are you seeing all that support at this time?
Well, those supports, I think they are good. They have impacted positively on those who are beneficiaries, even though there are issues around the quality of the intervention, the rate of default in some of those interventions, particularly at the much lower level, things like the Anchor Brewers program and so on. Some of the borrowers, see these interventions more or less as what you call national cake, in quotes, But for those in the medium to higher level, I think it has been very impactful because the kind of fund you get through the intervention framework are not the kind of funds you can get from the regular commercial banks. Look at the rate, single digits, and look at the tenor. Tenors as high as 5 years, 7 years, and so on and so forth. So these are not things that you can easily get within the conventional banking system. So to that extent, I think the interventions are good. But it is very important that we have a framework that allows for investment to flow in naturally outside of these interventions. Because the flow of investment, either from within the country or from outside the country, either from portfolio flows or from FDI, are also very critical.
We need the flow even more than
but the FX situation is not allowing that to happen. That is my concern.
All right. Well, we're still analyzing the post-MPC meeting, and we've had with us Dr. Muda Yusuf, CEO CPPE, Nnamdi Nwizu, co-managing partner, commercial partners, and Chinwe Egwin, chief economist at Coronation Merchant Bank. They're still here with us. We're going to take a moment now. We'll be back. Do stay with us. All right, we're still discussing post-MPC decision right here, and we saw that the MPC actually raised rates by another 100 basis points due to the surging inflation we're still seeing in Nigeria. And I still have in the studio Dr. Muda Yusuf. I also have Mr. Nnamdi Uwizu, co-managing partner, commercial partners, and Chinwe Egwin, chief economist, Coronation Merchant Bank, still here with us. Let me head on to Chinwe right now. So, Chinwe, let's look at the impact of the last hike on bond yields. How are you seeing it?
I think one thing to highlight is that the average FGN bond yields have trended upwards. And this is because there was an upward adjustment, as you mentioned. And this was seen at the longer end of the curve following the hike in the MPR to 13%. But we did notice that the effects faded slightly. However, in recent weeks, yields have trended upwards. So it will be interesting to see how that market responds to this 100 basis points hike.
Right, and let me come to Dr. Muda now. So, Dr. Muda, the governor did mention the concern about the uptick in non-performing loan ratio. You heard that he was quite vocal about that.
Yes, I think it's a reflection of the challenges in the environment. Because more and more businesses are finding it difficult to cope with the barrage of headwinds from FX, from energy costs, from insecurity, from logistics, and so on and so forth. I think it's a reflection of that, because once you have too much of these headwinds, the capacity to be able to repay loans will be constrained, and that is what is playing up, and that is why I'm worried about some of these policy development and responses, because we have two major categories of investors when we talk about these issues of this nature. You have those who are in the financial markets, they move financial instruments, and their instruments are very flexible. They can move easily from the bond market to the treasury market to equities and so on and so forth. It's not the same thing when you are talking about entrepreneurs. Somebody who has put a factory in place, you can't just switch from producing maybe a biro to producing chocolate. You are stuck with it. And this group of investors are playing a very critical role when you talk about job creation, when you talk about developing value chains, when you talk about pushing exports, when you talk about building an economy that is inclusive. So it is very important that we are sensitive to what is happening to this group of investors. That's not to diminish the importance of those who are investing in financial instruments. But when it comes to deepening what an economy should be and bringing as many people on board as possible, we should be relating to what their concerns are. Because the investment climate issues are very important issues. And some of these things we cannot fix very easily. What we can fix very easily are some of these policy responses.
Right.
To make sure that we mitigate the challenges that these entrepreneurs and investors are facing.
Okay.
Because it's becoming increasingly unbearable.
Right.
By tomorrow now, the banks will be serving new notes to investors who are owing their money. They're going to be reviewing rates, irrespective of what challenges they are facing. That is the concern that I have.
Yeah,
and that is the concern that most of the people in the real economy, that is the concern that they have.
Right, and the real economy actually need all those monies actually coming in, at this point. But let's head on now to the CBI. I heard the governor is talking about education, tourism, but let's hear what he's talking about right now. I know they're having that question and answer session right there. All right, let's listen to the next question.
All of you being here, I wish you a safe trip back to various destinations. Thank you, and God bless. Thank you.
Okay, I guess we missed that answer there. It's done now. Everyone's leaving right there. So, Dr. Muda, it's official. it's a new hike, and obviously the economy and most central bankers now are torn. At this point, how do you tackle inflation without putting the economy at risk? But it seems the central bankers have no choice in this matter.
You see, the thing is that we have practically exhausted the monetary policy tools as far as this inflation is concerned, taking into account all these critical variables. At this point, we expect some intervention from the fiscal authorities, not just so more by spending money, because we know the government doesn't have the money to spend, but about trade policy, for instance. What are we doing about import duty? What are we doing about tariff policy? I mean, we say that the investors, manufacturers, all of them are having issues. We can begin to review some of the import duty on their intermediate products, on their inputs. We can begin to review that. That could go a long way. Because if you look at customs revenue as a percentage of total government revenue, I don't think it's more than 10%. But if you know the pressure and the kind of burden that all these customs revenue import duty put on those who are in production, you'll be amazed. It's a lot of pressure. So the fiscal authority should not just sit by. It's not only about just revenue and tax. It's also about manipulating some of these tariff policies. We should have an engagement with the manufacturers, for instance. We should have an engagement with even service providers. I mean, we just had the celebration of this hospital that did the surgery for the vice president.
Exactly, it's quite laudable.
What kind of fiscal policy are we putting in place to support the hospitals, for instance? Are we waiving the cost, the import duty on their equipment and all of that? Are we giving them any tax concession so that you can put a stop to all this medical tourism and so on and so forth? So the point I'm making is that
education tourism.
Education tourism. What are we doing to support investors in education? These are social sector investments. So we should do a lot deploying fiscal policies in the area of tariff concession, in the area of tax concession to selected players in the economy without necessarily hurting those who are in domestic production.
Right.
So all right, these are some of the things I think
let me bring in Nnamdi Wizu now. Nnamdi, if you can hear me. So we're talking about the options, available now to our central bankers. What, in your view, do we have, does the central bank have to tinker with, at this point?
Well, I think the central bank is already doing what it can, which the focus of the central bank would be the monetary policy. Right. We've talked about raising the rates. I mean, you can look at currency and find out if there's a way they can loosen their currency policy to allow Naira to value a bit. Because if you look at the spread between the power market and the central bank official rate, you're looking at almost a 40% or 50% spread. So that's one thing they can look at. However, we still know that the major issue that we have here is really more supply side. Even with regards to the currency, it still comes down to supply side with regards to currency. So even if the central bank were to devalue the currency today, yes, that would hopefully bring in a bit of inflows, from offshore people who believe that Naira is currently overvalued. But you still come back, route to the same thing, which is that we still don't have enough supply of FX. We know what's happening with regards to crude oil production at 1.1 million barrels per day versus a peak of about 2.1 million. When you factor that in, you're losing almost 50% of your FX proceeds, right? We still know what's happening with regards to things like fuel subsidy and all, things that are more on the fiscal side rather than the monetary policy side. So there's a limit to what the monetary policy can do. There's a limit to how much you can use monetary policy to fight, the ills or correct the ills in the economy. What they can do, like I said, is looking at things like interest rates and trying to tinker with the currency. But it doesn't solve the problem. If you don't get the fiscal side of things correct, then you're going to continue to struggle with your monetary policy. Even if you were to raise rates today to, say, 20%, it doesn't necessarily guarantee you inflows coming into the country, because people who come in will still struggle to go out because you have issues on the currency side. So I think that the central bank, it's pushing, I think they're trying their best. Yes, there's still quite a bit of leeway for them to exercise or use other things, but we need to get the fiscal side on board to also help ease the pains in the economy at this point in time.
Right, and a study I recently read talked about a better option being cutting money supply, in the economy, and also reducing rates. How do you think that can actually work? Hello, Namdi, can you hear me? Okay. Okay.
I didn't get the question. Can you repeat that?
Okay, so
I didn't get the question. Can you repeat that?
Okay, so I was talking about a study that I recently read about. It talked about how money supply, in the economy also, exacerbates inflation. They talked about reducing money supply and, reducing interest rates. What do you think about that?
Well, I mean, definitely the money supply has a big issue on inflation, because inflation typically is either you have demand pull or supply push, right? So it depends on which side. If you're looking at it from demand pull type inflation, then money supply definitely has a big role to play. You continue to see too much money chasing too few goods, right? But we know that what we're seeing now is a bit from, you have the cost side, right? So you have the cost push inflation right now, which is what is pushing inflation or creating inflationary issues. You've seen what's happening with Ukraine. We've seen how the war in Ukraine has led to all sorts of increases in both crude oil prices, food prices, wheat prices, and all of that feeds into our inflation down here. So we are basically focusing, or we're basically facing two issues. One would be from the cost side, and the other would be from the demand side. Now, money supply would affect the demand side, but doesn't necessarily solve your issue on the cost side of things. So 100% reducing money supply would help you fight inflation from a demand perspective, but not necessarily help you from a cost perspective. In fact, from a cost perspective, it might worsen things, which is why you heard the central bank talking about a balance, because the less you reduce, the less money you have in supply, then the higher the cost of funding, which invariably ends up pushing up cost of production again, which ends up affecting inflation once again. So it's trying to strike a fine balance between your money supply and your demand and cost side of the economy.
All right. Thank you so much for that, Namdi. Well, I'm getting information that we have Ini, because Ini is right there, at the central bank headquarters there. Hello, Ini. Do we have you there now?
Yes, Laddie, I can hear you. We're here.
Yeah, great to see you on that side. What else are you hearing?
To be on this side, Laddie.
Exactly.
I do know that one of the things you're discussing there is the issue of money supply, which is a consideration of the MPC reaching this 100 basis point increase in interest rate. Because as you know, and we've been talking about, Laddie, for over some time now, the issue of electioneering and the political activities has also brought in some money supply into the economy. And of course, that is also fueling inflation. So as the central bank governor said, according to the MPC, as long as we see a surge in inflation as is going on, not just in Nigeria, but in the world, then you can expect the MPC to keep increasing interest rate, because that is the one way of dealing with it. And it's interesting that the MPC has also taken into consideration, because, I mean, we've been having conversation of what is the assurance that increasing interest rate will actually deal with inflation and not cause a stagflation in the economy. But the MPC has said that it's also taking into cognizance the fact that the CBN is working on developmental financing, and that should be able to balance it. So with the money supply from the political scene and falling inflation, we do hope that this increase in interest rate would, of course, see at least a tapering of inflation and a balancing with the development financing by the CBN in the economy, Ladi.
Yeah, quite interesting, because right now the battle is against inflation globally. But I know there was the question and answer session. I'm sure we missed, some maybe interesting questions. Did anyone strike you there?
Yes, there were some interesting conversations, but you need to watch the report for that. But I'll give you just a little bit of a hint. The central bank did give a very stern warning to individuals who intend to transact in illegal banking transactions in the country, and he did say that you will be found and you will not be able to transact in any bank in Nigeria. So that is a stern warning that comes from this MPC. That's when he was talking about the e-Naira and the efforts of the CBN, to ensure that more people get engaged in using the e-Naira and the advantages of it. He used that opportunity to warn Nigerians and non-Nigerians who intend or who are already transacting illegally in some banking transactions. And I think, Ladi, one of the areas of your interest, crypto, is
exactly
off the banking transactions. So you watch out for that.
I'll be watching out for that
Ladi, but yeah, but the CBN governor is very serious, and he sent out that stern warning. We'll put all that together and we'll have a more comprehensive report on that later on the news on Channels Television, Ladi.
Yeah, because I remember at the retreat, he talked about, fintechs, digital finance, and cryptocurrencies. They're going to be, coming up with a lot of regulation regarding, those types of finance. But anyway, I hope you get a picture, maybe sitting on that seat at some point. But I'll see you later in the office.
I think I'll try and sit. I'll try and sit on the CBN's governor's chair and post that picture.
Exactly, that'd be nice. Thank you so much,
Ladi.
Thank you.
Yeah.
All right, now. So let's bring the conversation back to the studio. Dr. Buddha, you heard her there. Stern warnings. They will be found, those that are using the banks for illegal transactions. What do you think about that warning?
Yes, it is good to welcome innovation in the tech space and all of that.
Right.
It's also very important that we are very careful so that people don't use those platforms, to perpetrate all sorts of issues of money laundering and all of that. Only yesterday I was listening to the news that some Nigerians abroad and all of that.
Some big brand, I saw that too.
Yeah. I've been convicted and are going to jail in the United States. So it is good to innovate. It is good to move, very fast along this tech corridor.
Right.
But it's also very important to be careful so that we don't, in the process of innovation, now leave room for people to perpetrate illegalities. I think that is what the CBN governor was
because I know most of these other forms of assets, like talking about cryptocurrency and fintech, most of them talk about, decentralization, trying to, let the forces, no middleman, reducing cost of transactions and all of that. But all of that also poses risk,
They pose a lot of risk. A lot of
financial
risk.
system of Nigeria.
It increases vulnerability of the financial system when it comes to issues of transparency, money laundering, and all of that. So that is why it is important that the regulatory framework needs to be a lot more tighter to avoid this kind of issues.
All right, let me talk to Nnamdi Nwizu right there. Thank you for staying on, Nnamdi. So it's the second half now of the year. What do you think investor sentiment would look like? Do you think the investors would just ignore, inflation, rising inflation, and also the rate hikes, the risk of recession?
I think investors will be concerned. We've had the talk around possibly getting into another global recession, at least recession in the U.S. And we know that recession in the U.S. tends to lead to global recession because, the U.S. has a major role to play in the economy. So I know a lot of investors currently are very concerned around how things are playing out and worried, what happens. It's almost like a bit of a vicious cycle. So you go into a recession, the Fed raises increased spending to try and, liquidity injection to spend its way out of recession, which leads to extremely high inflation, and then they start to tighten, which leads back to recession all over again. So it's been a bit of a vicious cycle over the last 3-4 years. And it's definitely playing on everybody's minds. And in Nigeria, beyond just a recession, I think we know that one of the major issues people still face here would be security, right? So we know that, for instance, the central bank is trying to push agriculture and the government as a whole. But we know that a lot of people are struggling with herdsmen clash with farmers and co. Insecurity. We have quite a number of people who are relocating from the country due to insecurity crisis and co. And all of that plays on the minds of investors, both the local investors and the foreign investors who would like to come in, because when they look at the economy as a whole.
All right, I guess Nnamdi got frozen there. We'll try and see if we'll get Nnamdi back. But Dr. Muda,
for them.
Okay, you can finish your thought. Can you hear me? Hello, Nnamdi, can you hear me? Okay, well, I think we're having issues there. So, Dr. Muda, so at this time, we're seeing a lot of investors right now, still invested, in these markets. And, hearing what Nnamdi said now, there are risks, right now, with most of these markets. Do you think those that are still invested should stay invested, or should they start, getting out at this point? Is there anything?
Well, even getting out is not easy.
That's another issue.
You see? So, and that is why it is important to create the environment. Apart from all these issues, NPR and the rest of them, we need to create the environment that will inspire the confidence of investors. Because you cannot grow an economy without investors, be they domestic or foreign. And the thing about investment is that, don't say that I'm overflogging this FX issue. The foreign exchange regime is at the heart of investment. It's at the heart of international trade. Whether you are talking of exports, imports, or even the movement of capital in and out of a country. And these things are very critical to how you can progress or prosper an economy. So that is why it is important that we get it right.
Exactly.
We get it right with our forex regime.
This is the time to actually get it right.
We have to get it right.
At the end of the day, emerging economies are at risk, exactly. At this point from global shocks. Well, I want to thank you, Dr. Muda Isu, CEO, CPPE. And I also want to thank Nnamdi Nwizu, co-managing partner, commercial partners, and Chinwe Egwin, chief economist, Coronation Merchant Bank, for staying with us and getting this decision, that most of us were expecting. It is a more hawkish stance, at this point. Hopefully, inflation will taper and react to most of these rate hikes we're seeing. All right, that's the show today. Thank you so much for watching. Hope you enjoyed, watching that decision there from the MPC. Until next time, I'm Ladi Williams. Thank you for watching.